Good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up. And this wrap-up is for Tuesday, the 22nd of November, 2022. All right, my friends. I apologize for no updates last night. It's Thanksgiving week, family in, had to get a tree, had to put the tree up, got to get the turkeys, got to do it all. I'm worn out from it, more so than the market. I'm sure you're going to go through the same thing. But it brings up that this is a funny week, all right? You have a full day of trading tomorrow, but volumes are way down. Then you don't have anything basically the rest of the week. That's the way to consider it. We're closed Thursday, and I don't even know if the stock market's open at all on Friday. I doubt it. I know that the futures market has an abbreviated session that begins Thursday night, ends at noon. But the volumes will be light. Do you think there's any data coming out with this thin volume? Let me just show you something. This is tomorrow. Mortgage Bankers Association number at 6 in the morning. Then we get advanced durable goods, jobless claims, U.S. preliminary November manufacturing and service sector PMI, new home sales data, University of Michigan, the final November consumer sentiment. We had the prelim already. EIA natural gas storage, the Baker Hughes count, which is Friday's coming out tomorrow. Minutes from last month's FOMC meeting. Yeah, it's old, but everybody will be pouring through it. That comes out. EIA petroleum stock preliminary estimates come out first thing tomorrow. Just remember, it's a thin day. All these reports have been moved up because of the Thanksgiving, but there's one more. The European Union is meeting to decide price cap. Are they going with the sanctions that the G7 is? Well, that could set off a whole crazy row between Russia shutting off even more gas, maybe all of it that goes into Ukraine. They accused today Ukraine of stealing the gas. Now think of the logic. They've been bombing all the facilities that would use that to put out power to get to the homes. 25% of the population now has no heat, no water. But they're stealing the natural gas so that it doesn't go to the people. Just bear this out, that it normally flows to, which are giving Ukraine all the money to fight the Russians. Does this sound logical to you? Anything about that sound logical? I have to laugh about it because when you put it all together, it's a little bit crazy. All right. A lot of green behind me, and why not? You're going into the holiday season feeling pretty good. It's been a terrible year. A lot of stocks are down 40, 50%. You know that. You can get a bounce here. The problem is the market is counting on the Fed doing something that I still don't think they'll do. I think you're going to be stuck with high interest rates for a long period of time. Yes, the Fed will stop raising them at some point in 2023. I don't know where that point is. Yes, if we get coming up data, and it's right around the corner, it's just in a week or two, we start getting jobs report, then we start getting the CPI, the PCE data leading up to the FOMC meeting at mid-month. Well, if those numbers come out hot, what do you do then? If they come out that they show softening, that guarantees the Santa Claus rally, in my opinion. Doesn't mean I'm right, but that'll carry stocks, I think. As I mentioned the other day, DraftKings, they filled the gap in the chart, and they've got some bad news. They were hacked again, back and forth in here. They're making good, they said, anybody that lost money on the hack, but it's happened. And notice how you filled that gap and you just ran out of momentum. I'll drop DraftKings after the holiday. We'll pick up another chart here, but I might as well finish it up now. You got a higher high, lower low. I don't see anything to do with that. And this whole battleground is basically between the 18-day average of closes in red, the 100-day average right here. You stuck your neck up once to the 200, got it cut off instantly, fell all the way back. That's a sharp break that the market had. But you haven't hit Bollinger Bands. They're not in play. The moving averages temporarily are what's in play in the market. And momentum's still up. So you have the bias up. You're over the 18-day average of closes. If you're over it, that determines, to me, that you have bullish bias. Under it, I have bearish bias. Yes, it can flip-flop. It's meant to because it's a filter on other pieces of the technical work. Then you have the momentum pointing up in the slow stochastics, but you have no trend on the swing line. I don't see anything there. Look at lithium. Look at lithium. Would you think it goes from 74.98 to 66.85, lickety split? Look at how fast that market failed. Am I surprised? No. For those of you that learn how to work with enhanced Bollinger Bands the way I teach it, you get up to a 200-day average and a 100-day average and the Bollinger Band together. It's often a major resistance area. Can you carry through it? Of course. You're talking zones, not a price. Did I think it was going down here? No. I didn't think it would stay over these prices, though. Yes, that's what I would have bet. It wouldn't. And when it turned down, it just fell a lot more. Maybe some people got caught. I don't know. In Apple, I'm just not a fan of Apple right here when I keep hearing China's locking down all over the place, city upon city. As the COVID, we could wake up in the morning and hear new records of COVID there. That's scary. So what are they going to do for their products? What are they going to do when you go into a store and they tell you, hey, we need another 2 months to get you your phone? I don't know. But I don't like that. So I walk away from things like that. Disney. Bob Iger's going to get $27 million a year, which is a reduction. I think he was in the $45 million or something when he left. Why is he worth less now? It's only $2 million a month plus. Wow. Will he be good? I read an article today that talked about chief executive officers, the head guys that come back after they've been out, and the failure rate. This man's pretty good at what he does. I wouldn't bet against this guy. I think he'll be the exception. Could I be wrong? Of course. But I'm a fan of his, a strong fan of his. I was not, as you know, Mr. Chopik. And did I not say he's got to be gone? How often did I say that in this video to you? He's gone. XLF, okay. You're overbought. You can go a little further here. I've said that I like the financial services. They have pricing power. And the economy's not falling apart and people are working. And the crazy consumer is going nutty with credit. Okay, they know one thing. They got their job, they got money in their pocket, they can buy. And they're loading up on credit at these crazy rates. I think you should be paying the credit off, not loading up on it, but well, who am I to tell anybody? In XLI, well, you're still fully embedded. So the industrial sector of America is what's fully at work. It's the tech sector. Tonight, Hewlett-Packard announcing what? 6,000 layoffs between now and the end of next year, basically, maybe into 2024. Whoa, what's going on there? Well, PC sales are getting hurt. Now, I just bought a Hewlett-Packard. I love it. It's fast. It's easy to work with. Price was right on it. It's doing my daily work and doing a nice job of it. When I come over to the XSD, the semiconductors, too overbought for me. The market's stuck at the 200-day average. If it pops, the Bollinger Band's in play. It was over it for 3-4 days, then it fell back to this. So it's acting with support. Would I ever tell a client to buy an overbought market? Isn't going to happen on my watch. Home builders, I don't get this. I don't understand why the home builders have all come back on this. They're not going to see mortgage rates down sharply. If anything, you're going to be arguing in 2024, are we seeing a stall in inflation that keeps the Fed fighting it? What's the real number the Fed has to see the PCE get to? Is it going to be maybe 3%? Do they let up there? But do we get that? And when do we get it? And how sticky is the inflation scenario? Here's what bothers me with the falling inflation, and I've got to share it. Flying right in its face is strong labor, overly strong labor markets. People are still hiring. They can't find all the people they want. I talk to my friends that have companies. This is going on still. That is not the scenario to break inflation. If you have money in your pocket and you can buy, the Fed wants to hurt demand. That hasn't worked so far. Energy sector. I wouldn't give you 2 cents for energy. As I just said, we're going to know tomorrow if the European Union is going to go along, what numbers the price cap. The U.S. has recommended $40 to $60 range because somehow our math shows in the U.S. that that's the cost of Russian production to produce a barrel of oil. Okay. So they want to get to a number that makes sense and not reward them another $20, $30 a barrel, $40 a barrel for the war effort. Well, what are they going to do in Europe? Okay. Are they going to be higher? They've already said that, no, they're not going to agree that if you put on from December 5th the sanction, that by mid-January, you have to have everything offloaded. They're arguing for 45 days from then. So they're doing whatever. I don't know. It may all be moot. Once they put out a price cap, Russia said they're not going to ship anything anymore. So if they're not going to ship, what do you have to give Russia more days to ship nothing for? One way to look at it. In GLD, you lost the embedded reading. I want no part of it. You could easily slip back here and I'll take another look, but the momentum's out of the market. SLV, been in a downtrend, got to the 18-day average. It's all we were looking for. You lose an embedded reading, there's a goal. I teach it in my course. COPEX, something is not right. Copper's the canary in the mine for industrial production in the world. The biggest user of it is China. Copper's going up as China's saying they're going into all these lockdowns. Something doesn't make sense. You're closing the factories, you're stopping the cities, you're closing the restaurants, people can't get around, travel's not allowed in some of these areas, and copper prices are going up, and the biggest user is China, and if people can't work in the factories, why is it going up? I mean, these are the way you have to think things out. Something else going on I don't understand. TLT, I get this one. The market is betting that interest rates have peaked in the back end, the 20-year on. That's why this is going higher. UUP, so now we talk about what the dollar's doing. Are you losing the bearish embedded reading on this chart? No, not yet. So had a rally, but you really haven't stopped the downtrend of the market in any way. And last, the FXE, well, if the dollar is coming down, this should be going back up, so it should not lose its embedded reading, and so far it hasn't. These charts are very different than the futures, which they are the flip-flop in them, losing these readings. Which one's going to prove to be the winner? Well, we'll find out. I want to remind you, if you take a look at the ad coming up, learn how to work with enhanced Bollinger Bands. I teach it to you in a way you haven't seen. Tie it together. You're going to master it. It takes a day to watch the videos, maximum. I think you'll get it very quickly, and then it's practicing with them. Take a look. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.